Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Monday. Okay, the index after a good start this week, despite gains being muted. At least local shares here are up close to 0.1% to 6,956. That extends the current rally to 5 days so far, at least in a 5 day period. The PSEi is up by 1.4%. This, of course, as the health department noted a downtrend in cases in NCR and in the country overall. But again, of course, they're still cautioning against complacency, but you have at least more action here with some of our advancers for today, some of which in fact recorded highs today. Let's start off with Aboitiz Power rising to its highest since January of last year. That's after it rose as much as 4.75%. So what happened here with Aboitiz Power? Well, their parent, Aboitiz Equity Ventures, gave the go signal for the sale of a quarter of its power unit to Jera Asia, Jera Asia being a Japanese utility company. Now, apart from the 25% stake sale, a privately held firm will also sell 1.99% stake in Aboitiz Power, giving Jera a 27% stake. Now, of course, this sale is expected to fuel growth as it will help beef up capital here for Aboitiz. Potential collaboration include LNG to power projects as well as new technologies here. Other than that, there are hopes of higher earnings here for Aboitiz Power after its coal plant, the GNP Mariveles Unit 1, resumed operations after shutting down earlier this year. Again, Aboitiz Power is a day's best performer, already on a 2-day rally here, again up 4.75% to 34 pesos and 20 centavos a piece. Its parent, Aboitiz Equity Ventures, also joining the rally here. That's up 2.1% to 53 pesos and 10 centavos a piece. Also, another notable gainer here, port operator ICTSI. It ends the day to its highest level yet, or highest close yet, at 204 a piece. It traded higher for as much as 9.5% earlier in the day, but pared back those gains. Volume is also 219% of its 3-month average. So what's happening here with ICTSI? Well, according to Japit and Tango of Philstocks, it was pushed higher by projections that the improvement in global activity will boost trade and in turn drive higher earnings here for the port operator. Again, looking at this chart right here, this is a chart of ICTSI since it started trading back in 1992. Its highest level yet being achieved now or attained now at 204 a piece. Lastly, from port operator ICTSI, let's go to another conglomerate, this time JG Summit, after it confirmed reports that their digital bank GoTime is targeting to launch mid next year. So just to give you an idea, GoTime is a digital bank partnership between the Gokongways and the Time Bank of South Africa. It already got a license from the central bank. Because of that bit of news here, you have JG Summit also joining the rally today, advancing 3.4% to 64 pesos and 8 centavos a piece. Here are other headlines we're keeping our eyes on. MMDA Chairman Benhur Abalos says the alert level system has resulted to improvements in Metro Manila's COVID-19 situation, but he admits hospitals still needs to be closely monitored. In today's Laging Handa briefing, Abalos noted that aside from the reopening of more establishments in NCR, the COVID-19 reproduction and growth rates have declined. However, he noted that they are still working on easing the number of patients in COVID-19 hospitals. The DOH Epidemiology Bureau reports that hospitals in the metro remain at moderate risk, but ICU utilization is still considered high risk. Meanwhile, Trade Secretary Mon Lopez says the government is eyeing to reopen gyms in areas under Alert Level 4 like Metro Manila. This as the sector calls for limited operations to be allowed and for indoor exercises to be considered an essential activity. The central bank says consumers are less pessimistic in the third quarter as more jobs opened up. However, business confidence fell to its worst since the global financial crisis in 2009. The BSP reports that consumer confidence index has improved in the July to September period. That's on the back of family members returning to work and households receiving higher income. But on the other hand, business confidence declined after three straight quarters of optimism. Companies said the pandemic, especially the threat of the Delta variant, affected their confidence this quarter, along with lockdowns in August and the continued decline in sales, orders, and earnings. And lastly, residential property prices slumped to its steepest rate yet in the second quarter. That's on the back of the continued decline in the prices of condominium units and single houses. Data from the Banco Central showed that the residential real estate price index contracted by a record 9.4% in the April to June period. This is worse than last year's 4.2% plunge and is also the biggest annual contraction since the data series started in 2016. The Banco Central said the COVID-19 pandemic continued to dampen demand for residential property. Nationwide, the prices of condo units declined by more than 14%, while single and attached houses saw prices drop by a record 7.4%. Is the office market experiencing the same downtrend? Are developers holding back from creating new supply as recovery remains uncertain? Let's find out from Maricris Sarino-Joson. She's the Director for Client Services over at Colliers, Philippines. Good afternoon, Maricris.
Good afternoon, Jess. Thank you for having us, for inviting Colliers.
All right, thank you for joining us. So, how much office supply at least are you projecting this year, at least the new ones, and are developers holding back from overbuilding as they await the sector's recovery?
Yeah, so what's really happening right now in the office market is we have additional supply coming in year on year. At the same time, we have an increase of vacated spaces. The vacated spaces is due on the new hybrid ways of working. So because when we had the lockdown March 16, a lot of companies shifted already to work from home, and some companies realized that this is effective for them. PEZA also has implemented 90% work from home, allowing PEZA registered enterprises, specifically IT BPM, to allow up to 90% of the employees to work from home. So this will also be dependent in January if the government will be lifting up the calamity
Mhm.
state of the nation. But based on our meeting with PEZA, that work from home will be allowed up to, I think, 70% when the calamity will be lifted by the government, just in case in January. So that's why vacancy in the office market continued to go up. As of Q2 of 2021, vacancy is already at 12.5%. We're projecting up to 15% vacancy end of the year. And important to note that as of Q2, we have approximately 1.6 square meter of vacancy in the market. If you try to visualize this is approximately 53 office buildings with 30,000 square meter per building. So that's a lot of office space available right now in the market. And we see this happening also with residential, with the impact in residential, because POGO, prior to the March 16 lockdown, Q1 of last year, we saw 1.3 square meter of space being occupied by POGO. But because of the lockdown that happened, most of the POGO that went home weren't allowed to come back anymore. That's why right now there's only approximately 800,000 square meter. That's why you're seeing an impact in the residential market as well.
Okay, you said a lot of things there, but primarily let's focus first before we go on vacancy rates. I just want to ask more about the new supply coming in. How does that fare compared to your supply, to our supply at least from last year and even pre-pandemic?
Yeah, so our recorded new supply for Q2 is the glass building in Ortigas, as well as the in Fort Bonifacio, this built-to-suit building of Mega World to JP Morgan. So these
Mhm.
are the new supply coming in to the in as of Q2, which results to the total overall supply in the market of 1.6 million square meters.
But well, given those current developments that we have, at least at the moment, what should be the supply strategy here from developers?
Yeah, from developers, there's a lot of new opportunities that we see. We see a lot of inquiries coming from the data center. One of the transaction that happened Q2 is the B Infotech data center that took up around 18,000 square meter in Bridgetown, the Robinson's
Mhm.
development. And we see a lot of inquiries coming from data center companies looking at the Philippines as the destination because of
Mhm.
tightening regulations in China and increasing costs to operate these data centers in Hong Kong. So this is another, I think, driver that we can capitalize on to also bring down vacancy for the office market. But also an important note to share, Jess, is we see pent-up demand coming from BPOs. What's really
Mhm.
slowing the take-up is the on and off lockdown. But
Okay.
I think for Q3, we'll have a better news for the office market. Colliers alone, we've closed transaction this Q3. So this will have a positive note, I think, for the Q3 report in terms of
Okay,
the
you,
office
you
sector.
mentioned at least a bit of an interest there from the BPO sector, but also earlier you did say as well the exit of POGOs and how that has impacted the market. Question is, are traditional firms and BPOs plugging that gap? At least are they doing enough to at least somehow eat up on the vacancy
Yeah,
left
I
by
think so.
POGOs?
I think so. Philippines is very strong in terms of the captive market. A lot of companies have their shared service here, and companies all over the world are trying to also bring down costs. So we see this new requirements going through the captive markets also in the Philippines. BPOs also servicing essential businesses such as insurance, e-commerce, and all those sorts of essential services right now. So these are where the demand's coming from. Healthcare also, Jess, is important to look at. We see a growth in the healthcare BPO market. So this is where the demand or the expansions or new setups coming in from
Mhm.
BPO.
Are you also seeing some growth here? Of course, this has sparked some level of interest since the pandemic started. Logistics and warehouses. How's that coming along so far this year?
Yeah, I think the industrial sector is one of the growth sectors that we can look at right now. A lot of, especially e-commerce, because of the change of behavior right now of consumers. So a lot of people have actually permanently changed their consumer habits of purchasing. That's why a lot of growth coming from the e-commerce for needs of warehouses.
Hmm. Now, of course, Maricris, you have at least vaccination rate in somehow at least improving, especially here in the capital. Do we expect that to improve take up and eventually a return to physical offices?
Definitely, when we run a survey last quarter, I think 200 respondents from our clients, and when we asked if your employees will be fully vaccinated, do you expect a return to the office? 50% of them responded yes, they expect a return to the office. So that's still a high number, and I think because also some people find it more efficient for them to work in the office, especially with online school. It stresses a lot of working moms. So
Mhm.
I think, yeah, definitely there's going to be a return to the office once the COVID situation improves.
Is it a full return or is it going to be a hybrid work scheme? What will be the
It's
norm
going
and
to
what
be
will be the preferred arrangement here?
Yes, I think the new norm will really be the hybrid ways of working. So right now we see companies evaluating their operation, what will work for their
Mhm.
company. At the end of the day, it's really finding that balance between the on-site and work from home or split or hybrid. So what will really provide efficiency for the company, dependent also on age and the type of work being done by the company. So definitely hybrid ways of working will be the new norm for
Okay,
the
given
office
all
worker.
that, what adjustments should landlords come up with, or how can they better adapt to a post-COVID scenario?
Yeah, so that's a good question right now. Well, for new buildings right now, you see a lot of this touchless features.
Mhm.
So for expansions or new setups, so companies would really look at all these touchless features and all this new equipment and technology to ensure that it's safe in the office, so that employees will be motivated to go back to the office. Landlords should also be flexible because of the new ways of working. There's going to be a new layout in the office. So a lot of renovations will be done. So landlords should more or less be friendly in terms of the renovation period and give the companies or tenants in their building the flexibility to retrofit their spaces.
All right, lots of pandemic-induced changes in the office market. Definitely. Thank you very much for your time this afternoon. Colliers Philippines Director for Client Services in Maricris, Sarino-Joson.
Thank you, Jess.
And those are the biggest stories this trading day, September 27, 2021. Catch Businesswolrd Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.